Welcome to Fintech Daydreaming, the podcast that dives into the world of banking technologies and the ever-changing landscape of fintech companies. We bring you real-life examples from global and local thought leaders, as well as experts working within the financial industry, and seek out the best stories from the front lines of financial services innovation, where dreams of industry pioneers meet reality. Hosted by Pål and Ville Sontu. This is Fintech Daydreaming.
Hello and welcome to another episode of Fintech Daydreaming. As usual, every other episode is a Nordic Fintech highlights episode, and we're joined today by me and Pål are joined today by Janne from Fintech Farm, Finland, Helsinki. I'm sorry. So, Janne, how are things with you today?
Pretty good. Honestly, I was invited by a customer to have a beer at the seaside terrace on this sunny day, but I had to come to the office to record this. So this better be a good episode or a very short one.
Yeah, exactly. We are recording on a Friday afternoon, so that's why we are trying to kind of wrap this up in a nice way, but still make it interesting. So let's see how we're going to be faring. Pål, are you heading out after the recording as well?
No, I actually have the fantastically joyful pleasure of having a meeting with a customer directly after this. It will be online. They are based in a completely different part of the world, but it will be an exciting discussion talking about core banking and progressive modernization. So yes, all the exciting, cool stuff to be talking about. Great.
And good luck explaining why we have plus 25 degrees Celsius in September here in Helsinki. That's
Ville, do not jinx it. This is fantastic. It is beautiful. I love this weather. Do not jinx it and bring on an early winter, okay? Please, don't.
Yeah, I know how to bring the winter. You go outside and it will be winter immediately. So again, let's make sure you're in customer meetings and me and Janne can go enjoy some after work.
Sounds good.
Good, but let's get on with it. Janne, so maybe we can start as usual. So how was August in Nordic Fintech, and how did we fare with the funding rounds and everything interesting related to that?
Well, in August, the Danes were clearly on vacation. Nothing happened in Denmark, and otherwise, yeah, not the most vibrant month. But in terms of funding rounds, there were only three this month. I think just a temporary summer thing. But as a trend, we can definitely see that ESG and impact companies are something which are raising mostly a bit earlier stage round funding throughout the year. So that's clearly something we've seen this year in terms of funding. On the partnership side, surprisingly, account-to-account payments making waves all the time. We also saw IKEA in actually couple of different news, which is interesting because I've been following that company from a fintech perspective now for a few years, because I think it's definitely a potential disruptor in the industry. And then also quite much stuff coming out from Klarna, but not the most busy month, but small things you can kind of pick up.
Yeah, I think we're going to be talking a lot about a certain pink company that you already mentioned there a little bit later in the episode. But before we get there, let's kind of parse through what you just said there. So it is interesting. I mean, even though Nordics is quite kind of cohesive area, of course, July seems to be the vacation month for the northern part of Nordics. And then in Denmark, everything dies down in August, a little bit like in Central Europe. So it's kind of this prolonged vacation period of July, August. So I'm still surprised to see so much movement despite of this time of the year. So Pål, what do you think? Is the July-August timeframe a good time or a bad time for fintechs?
It depends which way you want to look at it, really, doesn't it, Ville? To a certain degree, we all need to be able to slow down a little bit from time to time to be able to regain energy and recharge batteries and everything else. So maybe for a certain degree, it's good to see a little bit of a slowdown, although in business, we never like seeing slowdown. We always need to do better and better each quarter and push for more and more growth. One of the things that I think is interesting, and we talked about this before, you said, Janne, that we've seen a regained new explosion around ESG, and I think it's encouraging to see that we're starting to get over that sort of disillusioned part of ESG. And I say disillusioned because we've had an awful lot of fintechs in the past that have brought out solutions around ESG, but you really have to sort of scratch your head and question how on earth are they managing to measure any of the things that they are bringing to the table. So I'm encouraged to see where this continues going, and I hope that we're starting to see the death of the greenwashing, if I'm honest.
100%. We've had a lot of fintechs as guests on the podcast as well, talking about ESG topics, and are always around the exact same thing. There's too much greenwashing, there's too much fluff in this market, but maybe we're starting to see some maturement finally in this space, and seeing some results. It certainly seems like ESG is one of these topics that doesn't go away. We see trends coming and going, but ESG certainly has been around for a while, and it will be around for a while, as we see the impacts of that, even literally today with this heat in September in Helsinki. Very good. So that's for the roundup for the August news in Nordic Fintech, courtesy of Janne. But of course, Janne, we have to bother you for one more thing before we go into the headlines, and that is, of course, do you have a joke for our audience today?
Yes, I do. And if you noticed, I posted a joke reel on LinkedIn from the last 2 seasons, and I could clearly see all the people who appreciate terrible humor, so they were really into it. But yeah, I have a joke. So why don't fintech entrepreneurs do scuba diving?
No idea.
No idea.
They don't want to be dependent on the regulator.
So that's a diver inside joke for you.
That was actually a good joke. I like that one.
Yeah, I like it too. Yeah, I have a bit of a similar joke in reserve, which I already promised, I think, in the last episode when Chris surprised us with a joke. So I still don't get to say it. So I'm going to keep on teasing the audience and, waiting for a chance for me to share my reserve joke. So
you're setting very, very high expectations here now, Ville. So, yeah, exactly. If it turns out to fall flat on its face, it's going to be really painful for you.
But this style of joke, right? So you set it up forever and then it's awful. And the joke is that it's awful with the setup. So it's kind of this prolonged joke. So let's see which one is it. Good. But all right, on with the program, so to say. We are moving along as usual, and the next up, of course, as usual in the Nordic Fintech highlights, is the top headline stories we each have picked from last month's news. And as usual, we will start with you, Paul. So, Paul, which one of these news pieces did you choose this week?
Yeah, so some good, interesting news again from the month. I sort of second what Janne says. There was a bit of a slowdown. It wasn't the large amount of announcement and news as we normally do see, but it was still some interesting one. And the one that caught my eye was actually from IKEA. Now, IKEA is generally known more as a Swedish furniture flat packed provider, but they also have the bank Klarna, right? So they are doing some interesting things in the banking space. But the news that caught my interest is, and I actually think this is long overdue. IKEA has decided to start building a ecosystem platform, a peer-to-peer platform, to enable people to sell secondhand IKEA furniture to other people who want to buy secondhand IKEA furniture. And they're going to start a rollout in Oslo and Madrid, of all places. I'm sitting here scratching my head trying to think what is so special about Oslo and Madrid, except for the fact that Madrid is a fantastic holiday destination and Oslo is where I theoretically come from. So 2 very good places. But the interesting thing on this one is the scope of the capabilities that I can put around this. If you think about this whole growth of platforms, and particularly the platformification moving towards embedded finance. You can see here where IKEA is going. That says, well, initially we'll enable people to advertise some furniture that they can sell. On top of that, we might be able to initiate and manage the payments for you. Added to that, there might start being some other capabilities, buy now, pay later. You can see a plethora of different options that they can bring in from a payments perspective and also from a banking or embedded finance perspective into this. And obviously with Ikano as their underlying bank, I think this is a nice foot going into the waters of not only platformification, but the capabilities around embedded finance. So I'm really excited to see what's happening here. And like I said, I think it's long overdue. The idea of being able to have a circular economy around IKEA furniture is fantastic good, and a link back to ESG there for us, right?
Yeah. And I love the fact that when you were kind of thinking about what is the first nice thing to say about Oslo, the first thing that came to your mind, well, I'm technically from there, so.
Well, I do carry a Norwegian passport, and I do have some very, very vague recollections of living in Oslo as a child. So,
I have a vague recollection of going to a bar in Oslo and being bankrupt after ordering one beer. So that's one thing. Greetings to our Norwegian fans, by the way. So but on the topic itself, I mean, you're right. I think this is an interesting example of these kind of transactions and workflows moving to these large retailers and then facilitating them almost like end to end. In this case, in terms of resale of used furniture. Again, a fantastic ESG topic, as you said. But the interesting part is that they're facilitating the process on their own workflows and their own platforms. And this indeed is exactly what embedded finance is enabling for large retailers and owners of large customer bases like IKEA obviously is. And the reason why I believe this is happening right now is that we're finally reaching a point where the platforms have reached a maturity point where it is, first of all, technically possible, but it's also operationally efficient to do things like this. This didn't used to be very simple. Again, there's a reason why a lot of these processes were broken or semi-manual when it comes to embedding financial services into digital platforms. These days, things have moved forward so much that the likes of IKEA are leading the way in embedding financial services into their offerings. And it's a fascinating trend. It's almost like fragmenting the landscape again. I mean, at the point in time, you went to the bank as a central hub to get everything. And you were using banks' payment methods, banks' cards, banks' account-to-account payments. Now you're still using those same things, but then you're never actually going to the bank. And that's what we're seeing, these more siloed solutions. And I would also bet that the payment methods that these large retailers will use will favor the ones that are more cost efficient for them to complete those transactions. So another piece of the puzzle towards the whole discussion around account-to-account payments versus card payments dialogue we're having in the industry at the moment. And yeah, again, happy to see a large player like IKEA and Ikano Bank doing things like this. I'm sure they have all the right pieces to make this interesting success story in the future. Hopefully outside of Oslo and Madrid as well in the future. But Janne, what did you think about? Are you an IKEA customer and would you like to use this service?
Well, I'm not a huge IKEA customer, but I know a lot of people, of course, are, and there is definitely demand for this kind of stuff. And of course, it's not a new thing. We have seen more niche players to have something similar. We have fintech companies who have ideas related to this. But now we finally have a player who has all the muscle and reach and customer base and potential to actually make it happen. So that's why I think it's quite a significant thing.
Yeah, like you said, IKEA brand is known everywhere. It was my favorite place to go shopping whenever I moved abroad into a strange place. The first place I went to was an IKEA, and because I bet there was always an IKEA that you could go to and get. First of all, some furniture to your empty apartment, but then again, you could always get some nice Swedish meatballs when you're missing home as well. So again, nice places for an expat to go to.
But that's actually also a vision and demonstration of IKEA always being able to think a little bit outside of the box, right? It's not just a furniture store. Yes, they were the first to come out with the idea of having flat packed furniture that you had to put together yourself. They put restaurant into the shop. They gave you this whole, walk around to see all the great ideas. Most IKEA locations now as well have partnered with car rental or van rental companies. So you don't even have to think about anymore how you're going to get the furniture home unless you pay for delivery. You can rent a van. They'll let you rent a van or a trailer. They have for a long time had the ability for you to order the stuff online and have it delivered. So online commerce. They are continuously expanding out with new capabilities and enriching customer journeys. And although it's not all banking, it's a clear trend back to discussions we should be having with the banks that says, if you can enrich your customers in their journeys and at the points where they are with more and more capabilities, you're going to delight your customers, and your customers are more guaranteed to stay with you and give you more business rather than doing all of this multi-homing across multiple different banks.
100%.
Yeah, they're definitely the example of Swedish innovation, and talking about enriching the customer experience. So what could be better than the cheap hot dog?
Exactly. Yes.
Indeed. Good. I was about to say that, funnily enough, the most interesting embedded finance use case or a service that I've seen in the Nordics before this, at least, was Tesla. And then again, you were able to buy a Tesla with different financing and insurance option without ever leaving Tesla's website. And even though a lot of those processes were manual in the back, from an end user perspective, it was the first kind of really truly embedded end-to-end process, effectively ordering a Tesla online and choosing how to finance it there on their website. And like I already mentioned, I believe this is the future in terms of how people prefer their services to be done. They don't want to go to the bank and have a separate connection to whatever they're going to be buying and then having a negotiation with the bank in one way or the other in a separate channel. So as soon as the banks realize that it is the way it's going to be, the better it's going to be for getting those customers to stay at the bank. Good, but time moves on, and so are we moving on. So let's go to you, Janne. Which story did you pick from last month's newsletter?
So yeah, there were a few news about Klarna. One of them was about their quarterly results, and reflecting that, I think that's indicating sort of a bigger thing for the entire fintech and banking industry, because if we go back in time 3 years, we can remember how the VCs were pouring literally billions of money to big fintech companies like Klarna or Revolut, and everything seemed to be going very well. And then year two goes by, and these companies are reporting enormous losses, and valuations go down. And I was personally a bit skeptic that how are they going to ever turn this around. It will be like a big struggle and a long way. But now, surprisingly fast, we have now seen Klarna and also Revolut, for instance, reporting profits for a few quarters already. And I think that's a very strong signal that these big B2C fintech companies are here to stay. And they are like they're not going anywhere. We cannot anymore really question like what's the point, what's the business model here. So they are here to stay. And now the question is, what will they do next? Because there's obviously like a broad variety of angles where they can go more into commerce, more into banking, whatever they want to do. But that's what I think makes the game really interesting. That now they really start to have the muscle by themselves to come and disrupt things.
We always have to remember that for each Klarna and for each Revolut, there's at least a dozen failed B2C or C2B fintechs, as we always know. But I think the interesting phenomenon, and I think it's quite similar to the Revolut story, is that if they have gone all in growth, so again, growing like crazy, getting a lot of customers, losing a lot of money in the progress, and now with the current environment, with the high interest rates and otherwise more consolidated environment, they're finding themselves in a position where this customer acquisition is truly paying off in different ways for them. And I think the environment, again, with the interest rates, is totally helping them in this. I haven't looked into the detailed numbers of the Klarna's statements on where did the income actually come from, because there's an interesting discussion to be had about where Revolut's income is coming from. But again, seems like scale matters these days more than anything else when it comes to success in the consumer business, at least. So, Paul, what's your takeaway?
I think there's an awful lot of different variables in this. You're absolutely right, Ville, to a certain degree. There's a lot of cause and effect here. The economical situation has had an impact and helped. I also think, like you said, Janne, we step back to early days of these companies. There was a lot of VC money, and it's easy to spend someone else's money, which means that you end up with bad habits, right? You grow very fast, you feel cash rich, and you throw the money around almost. And then the financial landscape changes, and you suddenly find that you've got a habit already built up of how you're running your company and how you're forcing growth in a pace that's way too fast. And you need to cut back. And I think that's one of the things also that they have been good at is to slam the brakes on before it gets too late, and reassess how they continue with their business models. But again, there, as you said, Ville, absolutely, it comes down to scale. They were very good at getting economy of scale, getting enough users, and importantly here, active users, right? Because you can have lots and lots of users, but if they do jack shit, then it's not really going to help you. It's actually just a cost. It's not a revenue stream. So it's down to having the right users, the right business model, and being ready to pivot when you see that issues are coming. And I think that's what they've been very good at. There's been a lot that haven't been good at that, like you said, Ville. So it has been survival of the fittest. It has been making the right choices at the right time. I don't think that they're all out of the woods yet. Like you said, where is all the money coming from, or how is Revolut? We've had this in the past as well. How is Revolut actually counting up and announcing their profits? So good announcements, good news. I think it would be good to see that continues in the right direction. But it has been, I would say, to a certain degree, an element of luck as well. It hasn't all been, planned out in minute detail.
To Klarna's credit, though, they have been able to do some tough decisions along the way. So they have made some strategic turnarounds in many of their things. I think everybody knows, who has been in the Nordics for some time, like we have, knows that Klarna pretty much started as an acquiring business, and they really focused on the payment acquiring side, and then they kind of figured out the BNPL on the side of that, which became their main business. But it wasn't too long ago when Klarna actually sold off their entire payment service provider business, because they realized that they're not competitive against the Adyen's and Stripes of the world in any meaningful way. So again, pivoting away from a thing like that was basically your main focus at a time. I think that's a sign of a company that is able to renew themselves and again make bold decisions in order to stay relevant. And for sure, Klarna has been successful in that in many ways. Now, another piece of news from Klarna, which of course is interesting from the past few weeks, is that they have been talking very vocally about moving into AI and using artificial intelligence to, especially in customer service, in order to make those processes more efficient. I think they were boasting that they're going to be reducing like 50% of their labor force, mostly around customer service, on the account of using artificial intelligence to replace those human workers, so to say. They also maybe took the edge of that statement a little bit when they said that they're going to actually distribute that kind of efficiency gains as salaries for the employees who remain in the company, at least. But again, it's a bit dystopian if 50% of the workforce has to find a new job. I I mean, Janne, Paul, whoever wants to go first, what do you think about this artificial intelligence thing? Is it just an excuse to fire people, or is it a real thing?
Well, I think they already announced that they have the AI doing the work of 800 people or something like that, and they were forecasting that they would save around $30 million or euros only this year with AI. And well, yeah, I think it's obvious that that there's a lot of actual use cases where they can use AI. But I think at the same time, with a lot of tech companies, we've seen recently that companies have quite successfully been slimming down and kicking out a lot of people without huge impact. So I think it's a little bit both.
Paul?
Same, but different. We've had these journeys with other technologies where suddenly a new emerging technology is going to change the world and everybody's going to lose their job and God knows what. Admittedly, AI or variations of AI, if you look at machine learning and everything else, has been around for quite some time. We've just seen a accelerated growth of new capabilities being put around it, most recent being around generative AI. I think we're still in early phase. I think that particularly from a highly regulated industry like banking, there is benefits for AI, machine learning, generative AI, but I think in the right places, and I think that the regulators and everything else is going to put more and more focus on this. I question the reality of being able to reduce your workforce so substantially, and that it actually brings the long-term returns that you're looking for. I mean, I could probably in most companies, in most banks, say I'm going to remove 50% of my call center and replace it with generative AI. But let's then in 6 months' time, 12 months' time, look at customer satisfaction and see if the customers are still happy with the support they're getting and whether they're actually still being served as well as they have been in the past. And you might find that you're starting to get, erosion of customers because they are not getting the service that they used to get, and they're not getting the advice that they used to get. And even more importantly, do they really still trust that they're going to get the support and service, because they suddenly realize they're talking to an AI rather than to a human, and we still rely on human connections when we feel like we've got an issue or a problem or need to solve something. So I think there's a trade-off here that we're going to see long-term that says, yes, short-term you can maybe save some money by using AI, but in the long term you might find that it has a negative effect on other metrics that you maybe don't see the correlation of directly at the beginning.
Yeah, I think there is a natural aversion towards AI from humans, even though they really don't know that they might be talking to an AI. They kind of get this awkward feeling, and the reason why I believe that is true is that every time people realize that they're talking to an AI, they will definitely try to get away from that situation. Because again, we've seen this, for example, in the US election, when some candidates have been making AI calls. And as soon as the bot says that this is an AI and you can talk to me about anything, everybody hangs up. And the hang up rate is close to 100% when that statement is made, even though it sounds like a candidate themselves or sounds like a very natural human. I think the same is true for banking. At least personally, when I was getting my first house loan, there were already all these automated tools by banks all around, making it possible to apply for the loan online without talking to anybody. But I felt that I'm not getting the best deal when I'm not talking to a person. So it's just some predetermined algorithm that's going to give it to me. So at least I want to have the feeling that I have some agency in trying to determine the best possible rate for me for that mortgage. And I think moving on to the AI question, I think the same will apply. People will say, okay, it's fine getting some things from the AI, but then I want to talk to a real person in the end, especially when it's an important life decision. And that brings me to the last point on AI, which is the fact that I do believe that there's efficiency gains to be had. I think Goldman Sachs said that they're especially in development, so IT software development, they're getting 20 to 30% efficiency gains in terms of code created by people who are using Gen AI tools as a kind of co-pilots for development. So I think that's a very concrete thing. And then in customer service, it is easier to find answers for your customers when the customer service person has an AI bot to assist on those situations. So again, I feel that these human-controlled use cases of AI, where the human still is the interface, but then they're being assisted by these tools, kind of in the back end of that interaction. These are the key places for AI at the moment. These kind of self-aware general intelligence bots are a bit science fiction in my mind. Very good. Wrapping up that part of the Klarna story and moving on to another Klarna story, which is the headline that I picked from last month's newsletter. And this is a bit more fintechy nerdy thing, but again, interesting continuation of what we just were discussing about. And that is the fact that Klarna takes on banks with new account for storing funds. Some people would call that a regular bank account, which it is. But again, when it's Klarna, there's something interesting behind it, as you would expect. And the account itself is quite simple. So you're able to have an account at Klarna, and this will be launching in 12 countries across Europe and the US. You're able to send money to this account. But then in addition, when you're buying with Klarna, you're able to get cash back, which will be paid directly and only to that Klarna account, basically incentivizing people to keep funds in that account. I'm sure they have a lot of things planned to extend this offering as well in order to get more deposits and get people to store their money more inside Klarna. But for now, it's basically cashbacks. The interesting things, the low-hanging fruits here is this basically save now, buy later kind of things, where you set a goal and then you get discount when you reach a certain amount. Then you're able to buy the thing you wanted to. And this, of course, is a more sustainable way of buying things than buy now, pay later, I would expect. But from a strategic perspective, the launch of a simple bank account by Klarna might sound like a bit of a small thing, but it's actually huge from a business model perspective. Remember, so far, most Klarna customers are only using Klarna as a pass-through method for doing buy now, pay later and financing options, and they don't leave their money at Klarna. So again, you lend money from Klarna, which is, of course, a great business for them if they're able to manage the risk correctly. But none of that money really stays deposited at Klarna. And every transaction, therefore, that happens in and out from Klarna is expensive. Now, with the introduction of their own account, they're at least able to start to chip away from that transaction volume in a way that more of these transactions are contained within Klarna's own boundaries, therefore making them free or almost free for Klarna to do. This is the reason why closed loop systems are so much more efficient. Of course, when it's in your own closed ecosystem, every transaction is real time, risk is practically zero. And again, the transactions are very cheap from all angles, no matter how you look at it. And then combine that with the fact that the current interest rate environment makes it very beneficial for banks to have large balance sheets and large amounts of deposits on their balance sheet. I think this is an obvious move from Klarna. So you get both efficiency, better transaction value in a sense because they are cheaper, and you get the benefit of larger deposit base, also making it possible for you to do more lending based on regulation. Remember that Klarna also has a full banking license, which allows them to do lending as long as their balance sheet has enough deposits in it. The final thing I wanted to make is draw a bit of a parallel to the African financial technology landscape and mobile money. The reason why mobile money in Africa is very successful, I would say, even from a business standpoint, is the fact that these are closed loop systems. They incentivize money in significantly, making it basically free for people to deposit cash, physical cash, into their mobile money accounts. And then they put fees for any money that moves out of that mobile money ecosystem. In order for them to make people want to keep their money inside the mobile money system, they integrate partners. They make it possible to use that money in as many ways as possible. There are thousands of service provider integrations all across the mobile money landscape because of this exact reason. They want to keep the money inside the system, on their balance sheet, as the deposits inside the mobile money scheme itself, in order to make it financially viable as possible. And I think that is a bit the same thing that Klarna is doing here, incentivizing cash in, and making sure that people are able to use that money within the Klarna ecosystem without getting it ever out, basically, from there. So I think it's an interesting move, and I think it will be fairly successful for Klarna. So what do you think, Paul? Is this mobile money making its way into Europe, or is this a whole new thing?
Well, I can understand why Klarna's doing it, and it makes perfect sense. And like you said, they are a bank. They have a banking license. So creating a simple account or a value store for people to have and connected to, their transactions with inside of the Klarna ecosystem makes absolutely perfect sense. But this is nothing new. I mean, eBay did this a long time ago. It's a value store where you put your cash in and you can use it in the eBay ecosystem. And as long as money is moving around the eBay ecosystem, eBay is happy. That's why, sorry, I mean PayPal here, not eBay. I mean PayPal. And that's the reason why eBay bought PayPal, right? Because PayPal was doing the same. So it's nothing new. We've seen this before and we're going to see it again, but Klarna doing it makes perfect sense. So, and I like your analogy there of connecting it to the African solution there or infrastructure. But yeah, absolutely. One of the things that I didn't actually see when I was reading through all the information is whether Klarna is planning on providing interest to people that are storing their money in these accounts, or whether it will just be, a zero interest value store for a short period of time, or will they actually encourage people to store larger and larger values by providing interest on the money, almost like a savings account?
Yeah, I think we have to actually get back on that, because I do feel that they were talking about that in some context, but not in the story that I read preparing for this. So again, that's an interesting opportunity as well. If we look at the way Revolut does it, for example, I mean, they provide a different facility for the higher interest rate, and then they pay zero on the actual account that you use. I would bet that Klarna is looking for the same kind of a setup if they would pay any significant interest rate, at least. Of course, that's another way of incentivizing people to put their money in, is that you put a very high interest rate on the actual main account itself, which is done by the likes of Trade Republic, for example, which is still providing 4% interest rate on the main account, regardless of how you use that account for whatever you want. But Janne, what do you think? Are you going to open a Klarna account now? What are you going to do?
Yeah, the interest rate thing would have been one I would have asked about, like, do they have it? And definitely, like, Klarna, with the customer base they have and the marketing machine they have. So if they would like to kind of start to really focus on getting deposits, they could definitely do that pretty nicely, I would say, with the current position they have on the market. But yeah, otherwise, like also Paul said, that's not a new thing. We have been seeing these kind of solutions in Asia and Africa and US, and the question has been for quite a while, like, what's wrong with Europe? When is this going to happen? When do we get this kind of e-commerce bank account, super app kind of thing? And Klarna has been talking about it, and this is another step towards the direction, I think.
Absolutely. I mean, we've seen gift cards and store cards a long time, but again, Klarna being a fully licensed bank, this means that it's quote unquote real money that's in this account. So you're able to use it in efficient ways. And again, I think lowering the transaction cost, keeping it inside Klarna, even though the transaction rails themselves are becoming more efficient in Europe and the friction is decreasing, it's still a valid point that you want to keep as much of the deposits inside your own ecosystem as possible, especially in the current interest rate environment. But good, we are coming up to the end of our episode this week, and it's been interesting to see that even though it was a holiday month in August, that we got a lot of things to talk about and a lot of things to chew on, and then we'll be doing this again in another 4 weeks. Any final words, Paul, before we sign off?
No, I don't think so. I'm looking forward to seeing accelerated growth in the Nordic Fintech scene.
Absolutely. Janne, any announcements, any final words before we sign off?
Well, stay tuned. We'll be launching soon. Don't know exactly yet the financial figures from the Finnish fintechs annually, what we do. So that's going to be interesting. Again, see who's been growing and who's not. And then, of course, remember everyone to come to the Nordic Banking Forum in Helsinki on November 28th. So we'll be seeing both of you there, and I think Paul will be on stage as well.
Indeed, we will both be there, and let's see if even if I get to the stage. I haven't actually thought about that yet, but we'll see about that. You can catch me in Nordic Fintech Week in Copenhagen. Also, Money Live Nordics coming up very soon, and then we have the Mobi Forum member meeting, which I will be taking part of. And if you follow me on LinkedIn, you will know that there's going to be a fantastic Fight Club session in Mobi Forum, which I'm really looking forward to. If you don't know what Mobi Forum Fight Club is, ping us and we will let you know. Also go to mobiforum.org to find out all about it. It's the most fun thing in fintech at the moment, I would say, at least in fintech conferences. Great, but that's been it for this week. Again, thank you for listening. And as usual, go to YouTube, like, comment, subscribe, do the same in every relevant platform. We are everywhere. We are on Apple, we are on Google, we are on Spotify. You can find us everywhere. The easiest thing for you to do, like and subscribe. And if you like us, leave us a 5-star review. It will definitely help us and others find this fantastic Nordic fintech content with some dry humor here in the mix as well. Great. Thanks for listening. This has been Fintech Daydreaming.
This is Fintech Daydreaming.